Most agencies treat client retention as a passive activity. Renewals just happen. Clients reach out if they need something. The system runs itself. Then carriers tighten networks, premiums shift, a competitor calls, and clients quietly disappear. 65% of clients who leave never even spoke to their agent first. They just slipped away. The annual review is what closes that gap. This training is about how to build it. The annual review isn't a calendar entry or a courtesy call. It's the single highest leverage retention activity in your agency, and it's where most agents leave money and clients on the table. Done right, an annual review system holds on to 93 to 95% of your book year over year. Without one, you're closer to industry average, which sits around 84%. Why this matters? Clients don't usually leave because of price alone. They leave because they feel forgotten, because their situation changed and you didn't know, because a coverage gap surfaced at the worst possible moment, or because a competitor reached out before you did. An annual review system addresses all four of those silently before they become reasons to walk. The math on retention compounds dramatically. A book that retains at 95% doubles in lifetime value compared to one that retains at 85%. The agency that loses 15% of its book every year is running on a treadmill, replacing departures just to stand still. The agency that retains 95% grows on top of itself. The annual review is the lever. The system around it is what makes the lever pull every time. 3 things make annual reviews actually work. The cadence and structure are non-negotiable. The conversation has a defined agenda, not a casual chat. And the follow-through after the review is documented, scheduled, and tracked. Get those 3 right, and your retention numbers stop being a question. Start with the cadence. Every client deserves at least 1 annual review per year, and your top tier deserves more. Build your book into 3 tiers. A tier is your top 20% of clients by revenue, complexity, or strategic fit. They get 2 reviews per year, plus quarterly check-in touches. B tier is the middle 60%. 1 thorough annual review, plus a mid-year touch. C tier is the remaining 20%. 1 annual review handled efficiently, often by phone or virtual. Tiering isn't elitism, it's resource allocation. The A tier represents 30 to 50% of your time, and they should. They're the clients who refer, who consolidate household coverage, who trust you with the bigger decisions. Treat them like the strategic relationships they are. The C tier still gets a real review, just at a level that matches the relationship. Schedule the reviews 30 to 60 days before the policy anniversary or annual enrollment window, not at renewal itself. By the time a renewal notice hits, the conversation is reactive. Done 30 days early, you control the conversation, you anticipate market changes, and you set the agenda before the renewal letter ever arrives. Use a reliable scheduling system. Most agency management systems can flag upcoming anniversaries automatically. Build the workflow so the review reminder fires 60 days out for A tier and 45 days out for B and C. The review isn't optional. The system should treat it as a required touch point, not a nice to have. The review conversation itself needs structure. Without a defined agenda, the meeting wanders, time runs out, and the most important questions never get asked. Use a 5-part structure for every review and adjust depth by tier. Part 1. Life update. Open every review with 1 question. What's changed in the past year? New job, new home, marriage, divorce, a child added or moved out, a parent moved in, a health diagnosis, a retirement date set. Life changes are the single biggest predictor of coverage gaps and cross-sell opportunities. 5 minutes of listening here can surface 6 months of conversations. Part 2. Policy walkthrough. Walk through their current coverage in plain language. What they have, what it costs, what it covers, what it doesn't. Most clients don't actually know what they own. Reminding them of the value of what's in place is the start of every renewal conversation. They need to feel the coverage before they evaluate the price. Part 3. Gap analysis. Tie the life update to the coverage. If they had a child this year, walk through life insurance and beneficiary designations. If they retired, walk through Medicare timing and supplemental coverage. If they bought a business, walk through liability and continuity. The gap analysis is where retention and cross-selling meet. The same conversation that holds the existing client also opens the next sale, and it does both naturally. Part 4. Market context. This is where you preempt the renewal sticker shock. Talk through what's happening in the broader insurance market. If premiums are rising 5%, mention that the regional average is closer to 10. Context turns frustration into appreciation. The price conversation, framed by context, lands very differently than the price conversation in isolation. Part 5. Action items and next touchpoints. Close every review with specific next steps. Updates to be filed, new applications to be submitted, beneficiaries to be changed. The next scheduled touchpoint. Document all of it. The goal is for the client to leave feeling like the relationship is being actively managed, not waiting on them to call. Let's walk through what this looks like in practice. Susan runs a 5-agent agency on the East Coast. 5 years ago, her retention sat around 83%. She built a structured annual review system, and 3 years later, retention sits at 94%, with 1 cross-sell added per review across her A tier. Here's how she did it. She tiered the book over a single weekend. A tier became the top 20% by lifetime revenue, flagged in the CRM. B tier was the middle 60. C tier was the rest. Every client got assigned to a producer with explicit ownership. She built the review calendar. 60 days before each policy anniversary, an automated task fired in the CRM. A tier got an in-person or video meeting, B tier got a 30-minute phone call, C tier got a 15-minute structured call. She standardized the agenda. Every producer used the same 5-part structure: life update, policy walkthrough, gap analysis, market context, action items. A printed 1-page agenda went out to A and B tier clients before the meeting. The structure made the meeting feel professional and organized, not casual. She tracked outcomes. Every review logged cross-sell opportunities, gaps identified, and the next review scheduled. The dashboard showed which producers were on cadence. Slips became coaching conversations. 3 years in, the compound effect was clear. Retention rose 11 points. Cross-sell revenue grew because gap analysis surfaced opportunities that had been invisible. Referrals from A-tier clients increased because clients who feel cared for talk about their agent. The same book produced significantly more revenue with the same headcount. A few common mistakes to avoid. The first is treating reviews as renewal calls. A renewal call is reactive and transactional. A review is proactive and strategic. The structure, the timing, and the depth are completely different. If the client experiences it as a renewal pitch, you've missed the point. The second is reviewing only the policies you sold them. If a client has policies elsewhere, ask. A real review covers the whole household, not just what's on your books. Clients consolidate with the agent who asks. The third is letting reviews slip on busy clients. The clients hardest to schedule are often the ones who matter most. Be persistent. 3 offered times. A short text. A follow-up the next month. Clients who skip reviews quietly are often the ones quietly considering a move. Get the meeting on the calendar. The fourth is forgetting to log everything. A review without documentation is a conversation that disappears. Life update notes, gaps identified, follow-up items, next touchpoint date. All of it lives in the CRM, not a producer's memory. The next person who picks up the file should be able to walk into the next review prepared. Here's your action step. This week, do 3 things. Tier your book. Pull a list of every active client and assign each one to A, B, or C based on revenue, complexity, and relationship. Then build the review calendar for the next 90 days. Pull every client whose anniversary falls in the next quarter and schedule the review now, 60 days out, and design your 1-page review agenda. 5 parts. Plain language, ready to send to clients before the meeting. Retention isn't a marketing problem. It's a discipline problem. The agencies that hold their books year after year are the ones that built a system and ran it consistently. Build the system. Run it every quarter. Your book will compound, your cross-sells will surface, and the clients down the street will start to notice.